Hey, what's up everyone? JT here. Welcome to Pineapple Money, where I talk about stock market news and investing for the long-term portfolio. So November is finally here, and the stock market is going crazy with the elections, stimulus, illness cases, and everything that's going on in full force. I kind of want to go over a couple of stocks that are, in my opinion, super interesting to keep an eye on, especially when looking for the future. So in this video, I'm going to go over my top 5 stocks I'm looking super closely into November to pick up either shares or maybe start a position. For each stock, I'm going to go briefly review their technical analysis as well as discuss the stock fundamentally and determine whether what they have in the works for the future and what I want to invest in. If you do find anything interesting in this video, please don't forget to hit the like button down below and subscribe for more content. I would super appreciate that, and also let me know down in the comments which stocks you're keeping an eye for as well. Alright, let's get started. The first, and definitely one of my favorite stocks for growth, is Tesla. Now, Tesla is a crazy growth stock that has proven the time and time again that it's a massive force that is set to revolutionize the transportation and energy industry. And guess what? It's on sale for a cheap price of $388 right here, which is like what, 6 or 7 sushi dinners. But in recent weeks, they have been trading sideways, as you can see right here, as well as been trading downwards from the last day, as you can see right here, so 5% downwards. They've kind of just been following the broader market due to illness cases and, of course, volatility from the elections, which I would say is a perfect time to pick up shares in my opinion. Tesla has reached a high of $500 right here around, I think it was earlier, yes, right here around September time when they had their stock split. And I believe that no question, Tesla will be able to reach that high once again with very ease. So yes, they currently have a PE ratio of 768, which is a lot. A high valuation, of course. And yes, this stock has moved 5% up and down in a day. Very easy, like even this past Friday. But I also think it's really important to consider what kind of products they have now and also going into the future. Tesla is a fully electric automotive company whom has started to dip its feet into the energy sector with its solar and battery production. What I find really fascinating about Tesla is that they single-handedly made EV cars sexy while pushing for sustainable energy to different sectors. Currently, Tesla is selling their sexy lineup of cars with their Model S, their Model 3, the Model X, and Model Y. And in the future, they are soon to release their Tesla Cybertruck, which is their consumer mainstream pickup truck, the Tesla Semi, which is their commercial truck, and their Halo sports car, which is called the Tesla Roadster. And I'm sure if you heard of Tesla, you probably heard of the autopilot system. And CEO Elon Musk is planning to make their full self-driving service to be completely autonomous in the future. And I would say Tesla is strategically targeting crucial roles in the transportation industry, which includes autonomy. Now, in my personal opinion, what is really underrated about Tesla is not their cars, but actually their smaller entries that complement their vehicles. For example, they do have their solar roofs right here, which is a beautiful roof. They also have solar panels, and they also have a Powerwall. Well, Powerwall, I guess you can think about it, is like a battery for your house, and you can use this off the grid. And they also have their new battery that they're implementing right now, which I think it's a perfect opportunity for Tesla to get into the battery production market and also use it for their vertical integration. And lastly, Tesla does offer also Tesla insurance for their vehicles. And while this is only being used in California currently, Tesla is planning to offer this to other parts of the United States. And I think in general right now, Tesla is a very strong company with its vehicles alone. But once it starts to grow their smaller sections, I believe Tesla can become a bigger role in the energy sector. And also lastly, there have been very many rumors about Tesla being included into the S&P 500, and I think it's only a matter of time before they are placed in. It's not a matter if, but I think a matter of when, and I definitely would want to pick up shares before that happens. So in my opinion, I think Tesla is undervalued as where it stands, and seeing that their share price in November is around $388 right now, as you can see right here, $388. I have no questions on picking up more shares to add to my portfolio. Continuing the trend of EVs, I'm looking at NIO, ticker symbol NIO. Now, I'm sure you probably heard of things about NIO, whether they are like what, the Tesla of China, or they are risky penny stock and things like that. I've definitely heard my fair share, and to be honest, I used to be a super negative Nancy on them, But I did do a double take on them, and I found NIO to be actually an interesting company. So first of all, NIO is an EV company that is based in China, and they're currently trading at $30.58, closed on Friday, October 30th at $30 or so. And right now, they are very, very volatile. In the past week or so, they've been up and down like crazy. I think this past Friday, 4% down. The Thursday before, I think it was 10% up. So it's a volatile stock. But to me, it seems like they have stabilized around the $28 to $30 range. I can see right here. And honestly, this volatile stock kind of reminds me of what Tesla used to be when they were pre-stock split. But I don't want to compare Tesla and NIO because they are both in different stages of the lifespan. NIO was on the brink of actually bankruptcy towards in March, as you can see right here, March and April. They were like pretty much penny stock territory right here. But of course, right now, fast forward to October, they have 10 times that, and now their amount of share price of $30. Now, NIO fundamentally is still not profitable and is still losing lots of money every quarter. But NIO has the backing of the Chinese government. NIO has also their own hands-free driving system, NIO OS, swappable batteries, and just a great luxury EV vehicle. They are trying to create their own electric vehicles catered towards the same market as Tesla. And honestly, competition is better for the consumer. And NIO is also planning to expand their vehicles to Europe in the 2021 to 2022 timeframe. So I'm actually very interested to see what happens then. What really made me take a second look at NIO was that the company's valuation as well as its market cap. And right now, currently, NIO is sitting around a market cap of $41 billion, which in my opinion is kind of undervalued for what they stand for, especially for the future. And also recently, JP Morgan as well as Citigroup upgraded NIO. And also many other analysts has given NIO's future valuation. So 17 analysts have offered NIO's valuation for the next upcoming 12 months. And as you can see, the next 12 months, analysts believe either a low of $44 or a super high of $269. So as you can see, it's a pretty big movement up from the $30 they're sitting currently. And yes, like I said, looking at NIO's market cap, they are sitting low for $41 billion, but I do believe that this can grow much further. And right now, NIO is currently trading around their all-time highs. They had an all-time high of about $32, I believe, back in October 29th, you can see right here. And they are sitting currently at $30. So to me, this means that I am also a little hesitant to put more money inside. But as you can tell, the logical part of me is telling me to wait until they drop. But my gut is telling me that I should just put money in to see, because they do have a strong future ahead of them. So you can kind of decide for yourself and where you see NIO in the future. But right now, I am planning to nibble on shares when I can. I am planning to make a more in-depth video about NIO, so just be on the lookout for that in the future. My third stock prime for growth is AMD, Advanced Micro Devices. So AMD is a micro semiconductor company that has always been the underdog when compared to Intel. But now, the past year, AMD has proven its worth and shown that it's the main character of its own movie now. So currently, AMD is sitting around $75, which they closed at this past Friday, with a market cap around $90 billion, as well as a PE ratio of 103, which personally I think is a fair price for AMD. And also, AMD just recently had earnings, and in terms of numbers, they did pretty well. But something else also got announced that day as well. Investors seem to dislike the fact that they decided to acquire Xilinix, which is another rival company, which was acquired for $35 billion. Now, to some people, chip makers may be a boring company to invest in, but AMD has shown anything but boring by taking huge market share from Intel. With Intel now being behind in developing the 7nm chips, which has been delayed until 2022, AMD has always been pushing out the Ryzen 7nm chips this past year. AMD also recently announced their first products based on its gaming optimized RDNA 2 architecture. Now, these desktop GPUs will start to hit shelves in November 18th, as well also on December 8th. An analyst from Deutsche Bank also believes that these new AMD GPUs have the potential to go against Nvidia's own high-end gaming GPUs, while starting at a competitive price which is $50 lower than Nvidia's counterparts. So, in my opinion, right now AMD is currently trading at a fair price. And once results come back from those new GPUs, as well as digestion from the news that AMD acquired Xilinx, I do believe that AMD has potential for major growth. So currently, they are trading around $75, They did have a previous high of around $94 in early September, and I believe that AMD can reach those highs once again with ease. My fourth company that I'm looking towards the month of November is Walt Disney. Now, you're probably thinking, Disney, what the heck? Why Disney? That's not a growth company. Well, I would like to say you're partly true, but in my opinion, I would say that I think Disney is. And I would say almost anyone knows Disney for their characters, their cool theme parks, family adventures, as well as recently Marvel and Star Wars. And I mean, honestly, Disney is like targeting major demographics all throughout the entertainment industry. So, Disney is currently trading around $121 per share, which is what they closed out this past Friday. They have a market cap of $219 billion, as well as at a high of around $135 back in early September. And I believe right now, with their current share price around $121, I do believe it's kind of a fair price to buy in. But now, to answer the question directly, why do I think Disney is becoming a growth company? Well, because Disney is making a serious transition into the video streaming business. There is recent news from Disney that they are restructuring its media and entertainment divisions now to gear towards streaming. And now with accelerating their direct-to-consumer strategy, Disney can become an even bigger behemoth. Now, I won't say Disney will grow the same way as Netflix did, but the streaming industry has a lot of potential for them. So currently, Disney Media does make up a huge portion of its revenue from quarter 3 2020. As you can see, it is about 30%. And with Disney Plus being a part of Disney's direct-to-consumer model, which in total makes about, like I said, 30% of the whole revenue, I can only start to imagine if Disney Plus starts to get serious. I like Disney a lot as an investment since they are like a hedge fund for different parts of the entertainment industry. And once they work out the kinks of delivering and creating stronger content for the streaming service, like maybe even doing more spin-offs of the Marvel characters or exclusive release Disney Plus movies, I think Disney has a great shot at growing really fast. And my last stock I want to talk about is one of the most profitable companies in the world and sitting at a practically $2 trillion market cap is Apple. And now, I don't think I will need to explain Apple, but I'm sure anyone who's watching this video has touched an Apple product and know what Apple is. But Apple, in my opinion, is one of the most safest companies to kind of just throw your money at because somehow Apple's money is just working out and getting buffer because it's that growing. So, first, Apple is currently trading at $108 this past Friday, which is 5% down. And they do have a PE ratio of 33. So Apple recently just had their earnings this past Thursday. And of course, investors didn't take it well. As you can see, they are down 5% the day after. And I'm sure the broader market does have something to do with it as well because of the current elections coming up, as well as the illness cases on the rise. But it is clearly also visible that Apple investors do wanted more from their earnings. And Apple specifically was lacking two specific things. First was lower sales in China, and second was lower than expected iPhone numbers. And I did make a recent video on Apple's earnings specifically, so if you are interested in that video, I can link that down in the description below. Now, what I find really interesting is from Apple's quarter 4 earnings is that I think some investors are correlating Apple's weak iPhone numbers with future numbers in China. So, first, with lower iPhone sales from quarter 3, this will somehow impact future quarters of iPhone sales in China, which means China's numbers will continue being weak. But I think investors are somehow forgetting that those iPhone numbers that were reported recently do not include the iPhone 12, which just got released in October. Second, what makes this new iPhone 12 so different is that it's a new design since like 5 years ago, and it's promoting its so big 5G. And why I think this iPhone 12 will be in high demand is because 1, their global pre-orders have been substantially risen year over year. 2, there are so many ads about the iPhone 12 out there. And 3, of course, the biggest thing that they're promoting this year is 5G support, which is future-proofing for a lot of people. So I think Apple is actually really interesting to look at this upcoming month just because of the recent drop this past earnings and to see how they move, because if they do drop more, I'll be more interested in picking up more shares, no problem. Alright, so just to quickly wrap up my top 5 growth stocks, let's go review. The first one is Tesla. I believe Tesla is a great growth company for 2 reasons. One is that now Tesla's transitioning to energy, and second, Tesla's transforming the transportation industry to electric vehicles. Second, NIO. I believe currently NIO is an undervalued EV company for where they stand. And second, I believe NIO can go even further with the backing and help from the Chinese government. Third, AMD. AMD is a great growth company just because of their upcoming GPUs as well as the new acquisition of Xilinix. And third, and kind of I think most important, is that they are currently beating out market share from Intel. Fourth, Disney. I believe Disney's new streaming service, Disney Plus, has a great potential gain, and once Disney works out the kinks, I'm sure the streaming service can be very successful. And fifth, Apple. Apple's recent earnings showed that they had lower than expected iPhone sales, and I'm sure, as you know, those earnings did not show the reports from the iPhone 12 since they just came out. So I believe that Apple's new iPhone 12 can make big sales, and in upcoming quarters we'll probably see that. Alright, so that's pretty much the TLDR in short. So this kind of wraps up my video of my top 5 growth stocks that I'm looking in November. If you found anything interesting in this video, please don't forget to hit the like button down below and comment what you think that you want to look into more stocks for growth. Alright, thank you so much for watching. Peace.